terminal, accessed only by over 325,000 marquee investors across the world until now.
More than just business news, we're news for business people.
Good afternoon. Welcome to Bloomberg Quint. The headlines. Market snapped three-day gaining streak with both benchmark indices trading in the negative zone. FMCG banking players drag while metals and pharmas extend support. And banking stocks drag the markets lower. SBI, ICICI Bank and Kotak Mahindra Bank among the top losers on the Nifty. Dr. Reddy's is the top Nifty gainer after one of its plants in Hyderabad gets an all clear from the US FDA. And all eyes on the CPI inflation data for November and IRP data for October. CPI may hit a 14-month high, while industrial production is likely to slow down in October. Those are your top headlines. I'm Agam Akil. Up next is Hot Money with Darshan Mehta.
Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Before we move on into the stock, let's take a look at some of the stocks. Let's take a look at Maruti Suzuki, which overtook SBI last week to become the sixth largest company in terms of market capitalization. The automaker's share price has gained more than 70% in 2017 itself and is currently also the second most expensive auto stock in the world, according to Bloomberg. But markets experts are still betting on a rise. Yatin Mota is here to tell us why it's still why it is still a buy and analyzes what's working for Maruti. So Yatin, what exactly is working for Maruti? A couple of brokerages have 5-digit targets for Maruti also.
That's right, Darshan. And if you look at the analyst recommendation as far as Maruti is concerned, and look at this pie chart which will come up on your screen, 80% of the analysts currently approximately have a buy rating as far as Maruti is concerned, and despite the fact that it has run up over 70% on a 12 months, 1 year basis, and also if you look at the performance of Maruti in the last 1 month, despite that outperformance, we have a buy rating coming in from the analyst community, despite valuations being on the richer side. And what's probably driving the target price, and if you look at the brokerages which are talking about a 10,000 plus kind of a target price, we have Morgan Stanley, Goldman Sachs, IIFL, Macquarie, all of these four brokerages having target prices close to 10,000 or over 10,000 rupees per share. And of course, Morgan Stanley, which came out with a report yesterday, has a target price of almost 10,563 as far as Maruti Suzuki is concerned. And remember, their bull case scenario on Maruti is a target price of 14,400 rupees. So from the current levels, if that were to happen, we will have a 60-70% kind of upside even from these levels. Talking about the company and the kind of gains that we have seen, market capitalization, as you were mentioning, SBI higher than SBI at close to 2.76 lakh crores, YTD return 72%. And look at the valuations, not very expensive, not very cheap. FY19 price to earnings basis, it's currently trading at 27 times. Coming to the next slide, and we have the other Nifty stocks and comparing the performance of Maruti really from a share price perspective, from the investors' perspective. Year to date, it is the best auto stock. 12-month basis, the third best Nifty stock, and we have only companies like Bajaj Finance and Reliance Industries, which beat Maruti in overall returns, but it's the third best Nifty stock. And on a 1 month basis, it's leaving everybody behind, and it is one of the best performing Nifty stocks. Now really let's understand what is what really the setup is, the three things which work for Maruti. Number one is one of the most profitable original equipment manufacturers globally, and the kind of return on capital employed that Maruti generates, hardly any auto company does that. Talking about brokerages, most of them expect the profit growth to be at a CAGR of 20 to 22%. And finally, we have new launches which will probably help Maruti to get to the value chain, and especially in the electric vehicle segment, where its parents Suzuki and Toyota, both Japanese companies, have tied up to launch electric vehicles, which will probably benefit Maruti in the long term. Talking about the key things, which are probably not working for Maruti, probably a strengthening yen could impact the overall financials for Maruti, given the fact that a lot of imports and royalty payments happen in yen. So a strong yen will probably not augur well for earnings. New launches fail to get market share. In that case, we could see some pressures for Maruti Suzuki. And finally, we have if the growth comes down for a country like India, probably Fed rate increases and the consumer sentiment dampens, probably that will have an effect on the overall demand. And finally, we have the chart of Suzuki and Maruti. We are comparing, doing the BAB beta analysis, wherein look at this, somewhere in the end of 2015, both Suzuki and Maruti had similar market capitalization, and over the years, in the last 1.5 years, we have seen Maruti market cap rise disproportionately to the market capitalization of Suzuki. So clearly at this point in time, the chart says it all. The parent's market cap is probably lower than Maruti's market capitalization, and clearly indicates the kind of investor interest that we have seen for Maruti Suzuki this time.
Many thanks for that, Yatin, and certainly Maruti is a stock that needs to be watched out. It's a counter that has been moving significantly every day. It's up in trade today, also up almost 0.3%. But let's move on to hot money. Let's welcome our experts. Then Ashish Chaturmohta of Sanctum Wealth and Vinit Bolinjkar of Ventura Securities join us on the show. Okay, the stocks that we'll discuss today on hot money will be counters like Tata Global Beverages, Delta Corp, SBI, the pharma sector and Arvind. So these are the counters that we'll speak about. Let's talk about the first stock, and that is Tata Global. Didn't move for many years, but now is on a rip-roaring rally. The counter is trading, it hit its 52-week high yesterday. It's down in today's trade, but the management has indicated significant amount of restructuring that they're planning to do. Is that something that will aid the counter further, or is it already priced in? We'll ask our guest. Ashish, I'll start with you. Tata Global Beverages, what's your view?
So we are quite positive, but since we have seen already a very strong uptick, I think we can see some days of consolidation before stock going to an uptrend. And now this year, see, if you look at the Starbucks, they have added almost 10 stores in this year, with the total count coming to 91. What they are expecting is that the EBITDA is going to get break even by financial year 18, and in financial year 20 we expect the PAT to be break even. And overall, with the cost restructuring and exiting non-core businesses, this could be a very positive trigger. So going forward, I think stock might see some consolidation, but we expect the stock to continue in an uptrend, and we have a price target of 330, 340 on upside. 330
to 340. And what would be the time limit that
we are expecting it to happen in next 3 to 4 months.
3 to 4 months. Yeah. So you're rather bullish on Tata Global. Vinit, any view on Tata Global? Do you think it's priced in, or do you like what the management is doing in terms of?
No, I think the management is doing a lot of exciting things. They are right noises. And the key watchable out here is going to see the ROE expansion. So once the ROE expansion happens, stocks like who are in the foods business, like Nestle and GlaxoSmithKline, they could see a shift of money moving into Tata Global. We also have a lot of headroom there. But having said that, until we do not see the ROE pick up, I think the stock could languish in the range of 300 to 350.
Okay. But what could... the counter has already moved up, so what do you think will be the key triggers for the management to get this turnaround so that the return ratios move up? They are in single digit right now.
Yeah, so I think they're doing the right noises. They've restructured their portfolio pretty well. Even Starbucks JVs, as he pointed out, is coming to break even. So these are all the right things happening. So gradually the ROE will start moving up, And once the ROE gets into mid-teens, we will see the stock getting re-rated.
Okay, so that's the view that's coming in on Tata Global Beverages. Positive views from both the guests on Tata Global Beverages. The counter is trading near its fresh 52-week high. So that is one counter that is buzzing in trade. The next one is Delta Corp. Now the counter has corrected significantly. It's down almost 10% from the recent highs. Everyone thought that, post demonetization nothing could happen, but everyone was proved wrong. It actually doubled post demonetization. But post this correction that has happened, is it a good time to accumulate Delta Corp, or is it overvalued? Because valuations on this year basis is close to 50 times, on next year basis is 35 times. So Vinit, any view on Delta Corp? Should it be accumulated, or is it enough for Delta Corp?
No, I think there's a long roadmap ahead for the stock. There are a lot of kickers out here. One is the online business is growing well. Their Sikkim casino is going to start off. It's already started. I think the airport is gaining traction. So once the airport is up, that will see coming into play. And they're getting a lot. The Goa business was a lot offshore. So that is also now getting onshore licenses. And they're going in an asset-light manner. So I think all these three qualitative aspects can really pummel the stock up. We can expect high-digit growth rate in these stocks, upwards of 30%.
Do you think that the big trigger point that everyone is waiting for Delta Corp is the Daman casino license? Is it factored into the price, or do you think that if that comes in, that could be additional trigger?
Of course, that will be an additional trigger. So while getting the license itself gives you a kind of another leg up for more revenue flow. I think once that comes in, you will see a lot of growth happening.
Okay, and are you happy with the valuation of almost 50 times and 35 times next year?
So for a high growth stock, 35 multiple is not too expensive. And every decline should be used to buy into the market.
Okay, so it's a positive view that's coming in on Delta Corp from Vinit. Ashish, do you share the same view, or would you recommend something else?
No, I think this correction is definitely giving a good opportunity to enter a long position. Now, where the trigger would be, obviously Daman will be a big trigger to see a strong upside. But apart from that, online gaming and betting space is a big thing which is going to be the next 5-10 years. It's going to be the future, and acquisition of Adda 52 will provide an early mover advantage to Delta in that sense. And obviously their offshore casinos are cash cows, so obviously that's also going to give a lot of cushion. And post QIP, the overall balance sheet has strengthened. So I think keeping all this in mind, I think it's going to see a very strong upside. This correction which has happened in last 2-3-4 weeks, it's a good opportunity to enter into a long position. I think in a very short span of time we can expect 20-25% kind of upside, but going forward in next 1 to 2 years also, we think that Delta Corp is going to be a compounding story.
Okay, what are the charts indicating on Delta? I know you do a lot of technical analysis also. What do the charts indicate on Delta? Is it a bullish chart, or what?
No, definitely it's a bullish chart, Darshan, because if you look at the way it has moved from 160 to almost 290 levels, it has just seen a profit booking, and which is getting consolidated in last 4-5 weeks. So we have not seen a very steep correction. Otherwise, this stock would have broken 230, 240 odd levels, which has not happened. So I think weaker hands have just tried to book some profits, but it is into a consolidation phase. It might remain for maybe for another 3 to 4 weeks, but once it crosses 260, 265, that will be a trigger point. And once that happens, you might see 320, 330 in a very short span of time.
Okay, so that's the view that's coming in on Delta Corp. Both our guests are rather bullish on the counter. Vinit does believe that every dip should be used to accumulate the counter. He sees a significant amount of potential, and the Daman casino that would come in if the license comes in, that's another trigger for the counter. Ashish also indicates that the correction, 10% correction that we spoke about, is mere profit booking. There's not enough fresh shorts that are being built into the counter or heavy selling, but he believes that at lower levels this counter should be accumulated. Now the next counter that we'll speak about is SBI, the largest PSU bank. Even SBI has been under significant amount of pressure. PSU banks as a space is seeing a lot of correction. Now one of the cheap stocks as far as price to book multiple is concerned is trading at 1.2 times. The analyst community seems to be rather bullish on the counter post the recapitalization. But Vinit, post recapitalization, everything is priced in, or is it time to accumulate SBI?
I think I have a counter view to that. I think it's a wait and watch.
Okay.
And I believe that we have another round of NPA clearances coming in.
Okay.
So I think that would be the time when you should look at buying this stock.
Okay.
Around the time March 2018 would be a optimal time, because I think one more wave of NPA recognitions is on.
Okay. But what would your top pick in the do you share this view for the entire PSU banking space, or is it only for SBI?
Because across the board. So one of the banks which is, in my opinion, slightly insulated from all this is Indian Bank.
Okay.
Okay, but having said that, I think the greater delta would be in the after the NPA recognition has been done.
You see potential upside.
The potential upside would be higher in terms of SBI, BOB once this is through.
And if someone is looking to invest in the banking space, would you recommend a private sector bank or a PSU at this point of time?
I would right now go with the private sector banks, which are the old legacy banks.
Okay, so like an HDFC bank type.
Like a Federal Bank, South Indian Bank.
Okay.
So my pick out there is Federal Bank on a short-term basis. We can see 40-45% upside out there.
45%.
Yeah.
Okay.
And SBI and South Indian Bank. These are looking.
Yeah, I know I'm coming. This will come out as dark, but what is your reason for being so bullish on Federal Bank? Any reason, if you can state now? 45. Yeah, so that's a substantial upside.
Yeah. So they have been the first to get into the corporate book. They have focused solely on the corporate book. They're growing well. They have made all the right moves as far as digitization is concerned, and now their book is growing very aggressively. And third thing is that most of the hits have been recognized on the NPA front. So I think, having said that, the stock is available at decent valuations. A fair value for the book would be around 2.4, 2.5 times price to book over the next.
How much is it currently?
I think it's about 2-ish.
Okay.
So decent upside.
Okay. So what about you, Ashish? What's your view on SBI?
So amongst the PSU banks, I think SBI is best placed, and first of all, technically, if you look at the way it has seen a rally after recapitalization, it is just into a consolidation phase. I don't see 5 to 7% even downside from these levels. In fact, I would believe that SBI has a potential to test somewhere around 380, 400 odd levels in days to come. And obviously, if you look at into fundamental parameters, the performance has increased on both on the loan growth front as well as the NIMs have been increasing. NPL is about to come down from 9.5 to 5% in the entire PSU banking basket. So I think, and obviously this is going to yield into a normalization of return of assets to the tune of 2%, 1.5%, 2%, which is going to be very positive for book value per share. Okay. So we believe that SBI has a potential to deliver 30 to 35% kind of returns in next 9 to 12 months.
Is it only SBI, or you feel that which is the best PSU bank placement?
Best PSU is SBI is what I think.
And would PSUs outperform private banks at least in the near term? Is that something of view that you would?
So it will be very, very stock specific. I don't think that it's going to be a broad based rally in the entire PSU banking basket, but definitely SBI has a potential to outperform most of the private sector banks at this point of time.
Okay, so that's the view that's coming in on SBI at this point of time. Vinit does believe that it's a wait and watch for SBI at this point of time, but Indian Bank is something in the PSU banking space that looks good, and his top pick among the banking space would be a Federal Bank or a South Indian Bank. He's indicating a potential 40% upside in Federal Bank. But as far as Ashish is concerned, he believes that the PSU banking space, SBI is the best placed bank. He sees the potential 30%, you said 30%, 30-35% upside in the counter. So that's what we are getting. Let's move on to the next, and then for the next we've actually spoken about a sector which has been actually in the doldrums. So valuations of most of the pharma companies have actually come to significant multi-year lows. Like a Lupin is trading at 18 times, and we've been indicating that the promoter is buying significantly from the open market every day. It is something that we had recorded. Counters like Dr. Reddy's, Cadila, all of them trading sub 20. So is large cap PSU, large cap pharma stock something that would have a guest view, or they would prefer something else? So Vinit, among the entire pharma space, what would you like? Would you prefer the large cap or a small cap, or do you have any pick that you would like?
So the pharma cannot be looked as a sector itself. You have to do a bottom-up approach. Yes. Each stock is different from the other. Having said that, in this space, I think two stocks which I like are Suven Life Sciences and Laurus Labs.
Okay, Suven and Laurus.
Yeah. So Laurus, there's a substantial corporate announcements happening over the next 1 year. Okay. So they have some 6 ANDA molecules which are up for monetization, and once these approvals come in, the stock should start moving up. Stock is relatively attractively priced at around 16 times. And Suven Life Sciences, I'm playing more for a optionality kind of play with a limited downside risk.
Okay.
So they have a Alzheimer's molecule which is up for their third phase announcements coming in March 19.
Okay.
Well, March 19 might seem far away. I think at 11 times on the base business, we are looking at 11 rupees earning, and the stock is around 190.
Okay.
So you're getting a stock which is in CRAM's high margin business with the upside of an NCE coming through, and where all the research expenses have mostly been written off. So there is not much downside risk on this stock, but the upside can be humongous.
Okay.
So I think it's an optionality play, along with Laurus Labs, which seems to be a safer bet than all the other pharma stocks.
What's the scene with Laurus Lab? What was the rationale that you had indicated, and why do you like it?
So as I said that we are having 6 ANDA molecules which are coming through.
Okay.
And they have a great research team.
Okay.
So I guess these will get monetized. So I think on a FY20 basis, the stock is around 12 times. So which is relatively cheap. So I would like to go with these than with the earlier known names like Sun Pharma, Lupin.
Okay. Does Ventura have active coverage on these?
No, we don't have.
Okay.
But these are consensus estimates. I like the business model.
Okay.
They've been trying to reach the management. The management is a little circumspect to meet right now.
Okay.
So once we get in touch with them, we are looking to initiate.
Yeah, and I had one question on Suven, because they keep on announcing a lot of patents that they get. What's the upside there, and what's the benefit? When will that come in? Since you've been tracking Suven, so I just wanted.
Yeah, so Suven is doing the human trials in phase 2.
Okay.
They're slowly into phase 3. Once they get into phase 3, they're into phase 3 right now. So the phase 3 results will be announced, as I said, in March 19. Okay. There are not many successful or there are no drugs which are available for Alzheimer's. So if he gets to get success with that, then it would mean one of the very few global discoveries for Alzheimer's. So that puts it into a very promising category. And at the same time, if their molecule were to fail, okay, the downside is restricted because they've already written their research expenses off through their P&L.
Okay.
They have not been capitalized. Okay, so the downside is not there. The existing CRAMS business is going at 18 times. Okay, FY20. Okay. So that gives you a lot of cushion on the downside, plus the optionality of a NCA becoming a game changer.
Okay, what about you? What's your topic on the pharma space?
So I think, Darshan, I'll continue to have a positive on Biocon. In fact, in our last show also we had a very positive coverage on Biocon. Now if you look at, this is the first Indian company to receive biosimilar approval in the US, and it endorses the ability, the capability and the development and as well as manufacturing capability of Biocon doing a business in biosimilar, and we know that the kind of potential these drugs have once it gets launched. So I think yes, in terms of numbers you might not see those kind of numbers at this juncture, but going forward we believe that Biocon can be a story which will be a very, very strong compounding one, and obviously promoters buying from the market, that gives a very positive signal. So I think in a very short span of time we have a target of 600, but I'll not be surprised to say that Biocon in next 1-2 years has a potential to cross 740, 750 levels.
Okay, so that's a very bullish call that's coming in on Biocon from Ashish. Vinit does not like the large cap. He's saying it's a very stock specific approach. So two stocks that he likes in the pharma space, Laurus Labs, and more bullish than Laurus Labs, he believes that there is tremendous potential as far as Suven Life is concerned, and pretty much March 2019 is where we'll find out, right? March 2019 is where that will happen. The last and final stock that we'll talk about is Arvind. The counter is up almost 20% from the recent lows, has been buzzing significantly. A lot of brokerages have also started writing on the counter. Let's ask our guests, what's your view for Arvind, and with the demerger that will come in, what should one do? Vinit, any view on Arvind?
So we are extremely positive on the stock.
Okay.
We've got coverage on that.
Okay.
And we believe that if there is one story which can really play out this unorganized to organized market run, is going to be Arvind. Purely because they have got a portfolio of 20 brands. We expect retail business to grow at around 22% over the next 3 years. On the garmenting business, although their total sales are expected to grow at 9%, the garmenting business is expected to grow also very fast.
Okay.
And they set up facilities in Ethiopia. So that is really going to drive the business.
Okay.
So I believe that this is a very, very good play in the textile space.
Okay, but if someone post the demerger, would you shift to a Arvind retail, or would both the...
So I would go with
It's a hypothetical question, because it will happen after a while.
Yeah,
but where do you see more traction, the garment business or the
I
retail?
think the discretionary spend is going with the retail and the brand business. So I would be there.
So you said you have active coverage on Arvind. What's your target that you all have on Arvind, or a potential percentage upside?
I think 35-40% upside is very conservative.
Is very conservative on Arvind. And as a sector, is textile something that you like? Is Arvind your top pick, or are you all having coverage on
so Arvind is my top pick.
Arvind is your top pick. Okay, and Ashish, what's your view on Arvind? What do you make of it?
Very, very positive, Darshan.
Okay.
So if you look at, the proposed demerger of brands and retail business, it should create a lot of value. Most of the brands which they are coming to a stage where they require less of capital. The garmenting business also now what they are focusing is on a less capital intensive garmenting business, more on a advanced technology. So obviously all this put together, if you look at Arvind and for a discretionary play, and we have been mentioning that this is the era of consumer durables, consumer discretionary, FMCG. These sectors can see a very strong upside, because that the level of economy where we are in, any substantial uptake, it's going to be major beneficiary for most of these names. And obviously, Arvind having a lot of brands, I think Arvind, we have a potential target of 600 levels in next 1.5 years in Arvind.
Okay, what are the charts indicating on Arvind?
Very, very positive. So if you look at, it has been consolidating for many years. It gave a breakout above 350, 360 levels. Since then, it has already given 20-25% kind of upside. Again, consolidated post that demerger news, and now again in a strong upward trajectory. So for me now, even if it doesn't break 400, that will be very positive. That can lead to an immediate move till 540, 550 levels.
Okay, and is Arvind your top pick in the textile space? Yes. Just before we end, I wanted to speak to you. Are you happy with the valuations of Arvind? It's trading at almost 33 times this year and 22 times. So is it a fair valuation for Arvind?
Yeah, so our estimates are that the profits are going to double over the next 3 years. So FY20, I don't recall a number, but we're going to be we are very positive. So a stock where profits are doubling in 3 years, I think scores very well with me.
Okay, so that's the view, extremely bullish view coming in on Arvind from both of our guests. So before we end the show, let's have a quick recap of all the guest views on the stocks that we've covered till now. Okay, Vinit, Ashish, thank you so much for joining us on the show. With that, it's a wrap on today's Hot Money. Ask BQ comes up next. Stay tuned to Bloomberg Quick.